What do you think is the gap between having the idea and then being able to get access to funding?
Frankly, it's investment readiness. What is the work that you have done? I like to describe it as sweat equity. Have you validated this idea? That kind of work, it's boring, it's tiring, but it is most important as that's how you validate an idea before you even start looking for money. There are two angles to a proper business plan. There is the English-speaking side of things that describes the idea, and then there is the numbers-speaking side of things. Founders think that raising funds is a metric for success.
Right.
But in reality, when you raise money, that's even the beginning of your problems. So investors are looking for founders who are risk takers, but still very intentional. Before you go for a grant, check out three things. Firstly, my advice for those who are starting off new, you have an idea, you have no business with debt whatsoever. You want to ensure that your business has the cash flow.
So do you believe a great pitch can make up for weak numbers?
So make sure you can answer these three questions before you start going for investing. First one is...
Nnamdi, you're welcome to Unscripted.
Thank you, Ray. Nice to be here.
Yeah, I'm so happy that you said yes to us. I know the notice was very short. You are the second Nigerian guest on this podcast. Hopefully next year we'll do more. But thank you so much for coming. I want us to get right.
Thank you for having me. Yeah, sure.
Into this. But before that, how are you doing? Like genuinely?
I'm very, very well.
Are you sure?
Splendid, yes.
How has 2025 been? The year's coming to an end.
It's been a great year, funny enough. Without sounding cliche, it's literally been my best year.
Oh, wow.
Personally and in terms of work, in terms of for the company as well too. We've experienced new levels of growth.
Right.
So it's been amazing. I'm fine. Thank
Beautiful.
you.
Beautiful. For someone that'll be watching this conversation for the next 1 hour, who is Nnamdi? And then tying that to your business, the Intellectual Plug, right?
Yeah.
What do you guys do? What was the problem you guys were trying to solve? When I heard about you guys for the first time, the name was very intriguing. I'm like, Intellectual Plug, what are they doing? Yeah. So can you tell us a little bit about yourself?
Okay, so Nnamdi is Nnamdi. It's the most cliche answer, but my name is Nnamdi Nwachukwu. I am an economist by background. I studied economics, but by profession, I've gotten into business development, startup support, mentorship, advisory, and general business development expert, if you like to put it in one phrase. What do we do at the Intellectual Plug? I like to use another phrase to describe it: investment readiness for startup founders. I know that in the course of our conversations, we'll go deeper into that. But simply put, business owners, founders, it's not strange to hear people say, entrepreneurs say, I'm looking for funding, I'm looking to raise funding, or I'm looking for investors. Investors, on the other hand, so that's one hand. Investors, on the other hand, have money, but are looking for ways to make more money. And so they are saying, where can I put this? Where is a fertile ground that I can put this, that to generate more money? However, they are being very careful. They want to ensure that they don't just throw money into what the Bible would call as unfertile ground.
Right.
Yeah, so we help investors ensure that they're throwing their money into fertile ground, and we help startups ensure that whenever they do reach out to investors, they are seen, perceived, and are truly fertile grounds for that investment they are looking for.
So you're helping two people here?
Yes. Wow. The startup founders
and then the
investors.
What made you start this? Because I know you're running this with your wife, if
Yes.
I'm correct, somewhere around 2019.
Yes.
What was the reasoning? Why did you start this?
Ray, this is unscripted, so I'll give you, there are smart ways to answer that, and it will sound very nice. But the truth is, I started out as a side hustle, writing business plans. It's something I learned on my own. But anybody who is in the space knows that there are two angles to a proper business plan. There is the English-speaking side of things that describes the idea, the market, the advantages, the core strength or the unique selling point of whatever that business may be. And then there is I like to call that the narrative. And then there is the numbers speaking side of things, where you now have to, I'm going into business. What are the numbers saying? Is 1 + 1 = 2, and is 2 - 1 = 1. So when I started out, I was the narrative guy. I could write business plans really solidly, very well. But I had a skill missing. I noticed that the quality of our business plans was missing proper financial analysis.
Okay.
And that skill was missing. It kept being missing until I found Zainab. That's probably story for another minute, or coming further down our conversation. But when I did find Zainab, then I had what I could call a full scope or full service, end-to-end business development service. That was what the missing link was, and so we started out as a side hustle, but slowly began to see how our services was genuinely making a change. We slowly began to see how a business owner who had probably applied for grants or for business funding 2-3 times before they met us, could now access this grant or access this loan after working with us. So, yeah, that's literally how or why it started. Basically, we started first and foremost as a result of a missing skill in my own skill set. Yes. And then when we started working together and seeing the kind of effect or impact that our work had on startup founders and seeing people access funding from our work, then it now blew up into a proper full-fledged service.
I love that. Let's take a business corner, right? A lot of people have business ideas, great ideas.
Yes.
A couple of weeks ago, I was talking to one guy and we were talking about how in this particular, everybody wants to be an entrepreneur. Yes. Everybody has an idea. Yeah. Every single person. I'm sure if we go around, everybody has an idea. But the most times when you start with that idea, the difficult thing now becomes the funding, which you mentioned at the beginning, right?
That's one of the difficult things.
One of the difficult things.
Yes.
What do you think is the gap between having the idea and then being able to get access to funding to maybe scale the business?
I don't want to use the word cliche so many times throughout our conversation, but frankly, it's investment readiness. What do I mean by that? Everybody has ideas. In fact, fun fact, I have a religious background, right? So I believe that ideas are God's seed scattered on earth, and it can germinate anywhere. So if you don't work with your idea, or if you don't work on your idea, it will probably germinate somewhere else. That being said, the difference between an idea and when people now start looking for funding is genuinely, how ready are you for this investment? So what is the work that you have done? I like to describe it as sweat equity.
Okay.
So have you validated this idea, right? You're starting up a business, or you want to start up a business. You have an idea to target, say, maybe you want to start a parachute company in a parachute or helicopter service, right? In a rural part of Nigeria. Have you gone there to identify and see, first and foremost, does anybody have a helicopter service where you're going to do that? Secondly, is there any helipad around that place where those helicopters will land? Thirdly, what are people even currently doing there, right? There is nothing new under the sun. Before cars came out, we were using bicycles. Before bicycles, we were walking. Before walking, we were crawling. So humans would always have a way to either solve a problem or deal with that problem, right? So how or what are people already doing? So you need to execute certain type of work. Furthermore, you want to find out who is going to use this helicopter service. Who are my customers, right? What are they currently doing? And how would I offer this helicopter service in such a way that they will leave what they are currently doing and adopt my helicopter service? That kind of work, it's boring, it's tiring, but it is most important, as that's how you validate an idea before you even start looking for money.
So that's the business setting itself as investment ready, a term you usually use.
Yes.
Oh, I see.
Validating a problem, validating your customers, testing the market, starting small, and then trying to grow. So all of this exists between having an idea and trying to raise funding, even for that idea. Like, it's not only established businesses that are qualified or pre-qualified to raise funds. You have people who have good ideas or solid ideas who also raise funds. But the difference between Mr. A, who has an idea and raise funds, and Mr. B, who also has multiple ideas but has never raised funds, is the amount of work done on that idea.
Right.
You understand?
Yeah.
Very quickly, somebody says, I want to offer customer service. I want to offer customer support, right? You can just stay in your house, January to December, month in, month out, and keep saying, I want to offer customer service. Or you can start and find out, who do you want to offer customer service or customer support to? Do you want to work online? Do you want to offer it to hospitality businesses? Do you want to offer it to schools?
Mm-hmm.
What kind of customers do you want? Why would you even offer customer support services? Who are you offering it to? Who or what kind of solutions do the people you're trying to offer this service to? What are they currently doing, and how would you be different? Now look at these two scenarios and tell me, who do you think would approach an investor for funding, and who would then get that funding? The first person who keeps on saying, I want to offer customer service, and the second person who has, identified the amount of work that needs to be done and also put in some work before then approaching the investor. Sweat equity.
Right. You've worked with a couple of people from 2019 to now.
Yeah.
Looking at the businesses you've worked with so far.
Okay.
What is there a common pattern you are seeing in how they are approaching funding? So, like from the business side of things, maybe they are looking for funding, they are moving to investors. Is there a common pattern in the mistakes they are doing?
In the mistakes that they are making?
Yeah. Or what kind of mistakes have you seen?
I think the latter is a better way. What kind of mistakes have you seen? Beginning to assume or think that there's a, I don't want to say general, but there's a popular mindset that raising money from investors is as good as hammering. I don't know if you understand the phrase hammer. It's more or less, I don't know whether it's an African or a Nigerian or a West African thing, but when you say person don't hammer, right? So founders think that raising funds is a metric for success.
Right. Like once they raise the money, that is it.
That is it, like you've succeeded. But in reality, when you raise money, that's even the beginning of your problems, because investors want to see that you can scale, you can grow, and that you grow so fast to the point that you have to raise more money and your valuation is increasing, so that their own investment has also grown beyond just an ordinary investment. But that general mindset of raising money and that's like you've succeeded or you've become rich, you've hit it big, you've won the lottery by raising money, that's a very wrong mindset. In fact, if anything, it's the farthest away from the truth, especially for startups that succeed or that want to succeed.
Wow. I've never thought about that particular thing, because most times when I think of, oh, Charlie, we need investors, I'm like, the moment we're able to raise like $1 million, that is it. But then yesterday I was having a conversation with a friend, and I think we are running a business together, and one of the things we are struggling right now is bringing investors on board, because just like you said, the moment they give you the money, that's when your problem starts, because they are looking at scaling. What are you trying to do and everything?
Yes, your strategies.
It's more like they are now more on you.
The light is on you. The light is on you.
Wow. Interesting. Now, from the investment perspective,
okay,
what are they looking for? A business comes, okay, we want money. They've done everything you've mentioned. Like you spoke about their investment ready.
Yeah.
What is the investor looking for before they say, okay, I'm going to give you this $100,000 US? I'm going to give you this.
That's a very, very good question. And I would answer, because some people would watch this and wonder, okay, but you've not invested, so how do you know? I've worked from two sides. I've been humbled to work from two sides.
Okay.
The first side is founders who are looking to raise funds that come to us to help them make investment ready. And then the second set of people are investors, which could be institutional or private, that call us and they're like, oh, I'm about to make this investment. Come and help me review these numbers, or come and sit in on me so that we interview these startups, or sitting on me through the journey while I make this investment. From the investor side of things, after they've seen that this business is truly investment ready, there's what is known as due diligence. So you've said that, you started this business 5 years ago, and you have 5,000 customers, and you have 5,000 more on a wait list, and you're charging $100 per product, and you're making 50,000 sales, from the 5,000 customers. Everything is amazing. It looks great. You are investment ready, at least on paper.
Yeah.
Can the investor really go back and check and see that everything you've said is as it were? Or did you say 50,000 when you meant 5,000? right? So due diligence, that's the very first step, just to confirm that all A's are A's and that all I's are dotted and all T's are crossed. The second part, which investors like to check, and I think this is a vanity metric, so you can describe it as a vanity metric, but it's also very important, right? What's the personality of the founder I'm trying to invest in? A person could be selling 1,000 bottles of Coke as a founder or as a salesman, right? And that's okay, that's successful. But then you go and meet an investor who is expecting you to sell 100,000 bottles. And if you're selling 1,000 bottles and you're comfortable, for you to now start selling 100,000 bottles, you would need to do everything that is uncomfortable, everything that is unconventional. Expand your network, meet more people, think strategically, think off the book. So investors are looking for people who are self-starters, founders who are self-starters, founders who are risk takers, but still very intentional. So it's one thing to be a risk taker, it's another thing to be intentional. Be careful about the kind of risk that you're taking. And then you can sum it up as purposeful, intentional founders, right, that have likable, good characters. And then a team. What's the strength of the team? What's the synergy, behind the team? For the Intellectual Plug, for example, a lot of people know Zainab and I, right, because we are like the faces. But there's a whole lot, there's a strong team behind. There's customer service, there are financial modelers, there are graphic designers, all in the background. So how does your team work together? What's your team strength like? These are some of the things that I know investors look
but
for.
How important is money in that aspect? So let's say the business is coming to the investor.
Yeah.
We spoke about numbers at the beginning that you said you have 50,000. Do you really have 50,000? But how is important is, okay, maybe in the last year we've been able to make this and this is the profit, this is this. How important is that?
I've never done this before. I don't know. At what point do you call someone Charlie? Do you just call anybody Charlie?
Oh, yeah.
Okay. So I did say Charlie, the numbers are very, very important. The numbers are very important, and they're important for two reasons. Firstly, if it's a brand new business altogether, you haven't done anything, the numbers are important because these are what you're saying you're going to do.
Okay.
If it's an old business which is trying to raise funds, the numbers are important because irrespective of what you've come to me to say you want to do, what have you done? Your numbers will show. So while it is not the only thing, it probably is 51% of the deal. If the narrative is supposed to be 50% and numbers 50%, I would say numbers are 51. It's just slightly more important. It's actually very, very, important that you ensure that your numbers make sense, whether you're starting out or you're expanding. If you're starting out, it's a point of reference. If you're expanding, it's proof of your performance.
Right. Okay. So if you're now starting out, and I want this to be maybe a bit practical for someone watching who wants to maybe, okay, I have an idea and I want to do this right.
Yes.
If I'm now starting up, I have the idea, most of the numbers are going to be, what's the word? Let's say assumed or maybe predicting, let me put it that way, or projecting.
Yes. Projected.
How do they go about it? How do they approach it? I don't know if you get what I'm saying.
How do they approach it?
Yeah.
The easiest way to approach it is to come to the Intellectual Plug. A practical way to approach it is you have to, there are scenarios. And that's one of the reasons why I think we've been able to stay relevant. We don't just build you a model or build you a pitch deck and throw you into investors. We like to work with what we call scenario analysis because it's life, Things could go bad, things could go better.
Yeah.
A practical way is to build your assumptions with scenarios. So look at it from base case, which is market entry. Then think about what if things are worse than my base case? That's your worst case entry. Then what about if things are better than my base case? That's your best case entry system. So I would say think about things not just in a mechanical, straight, linear manner. Try to think about it multi-purpose. Look at it from different lenses. If things are good, what if things are better? What if things remain the way that they are? That's one way. Another way is to be very realistic with your assumptions. So I'll tell you what I mean. Assume somebody is building a fintech app, right? And they are going to get paid, or their revenue streams are from subscribers. And I see this happen a lot. When you just do the maths for them, people just freak out. And then they tell you, oh, we're going to have 1 million subscribers in the first year. It sounds okay. It sounds logical. It makes sense. But then when you now start breaking it down, that's 500,000 subscribers in 6 months, 250 in 3 months, 80,000 in a month, 80,000 plus. That's about 20,000 a week, 3,000 subscribers every day. It's not very easy to achieve. 3,000, so that means 3,000 new people today, 3,000 new people tomorrow. How realistic is that? While it can happen if there are organic events, that happen and people sign up, or the marketing budget, if you have a marketing budget like Temu, for example, right, that was just in everybody's faces, that would make sense. But normally, without any crazy marketing budget, to expect that you're going to have 3,000 signups every day is a lot. So you want to ensure that your assumptions are as realistic as possible, as opposed to just, throwing or blotting out figures in the air. Then finally, for those who have maybe like accounting backgrounds or finance knowledge, right, there's some of the things that you're supposed to do, which is like one of them is called valuation, to know the value of the company. Ascertain a monetary value of what this company is valued or currently is worth at. You can have people who have just ideas, and while it is, possible in very rare instances, but with just ideas, no sweat equity, you can't just come up and just say, I have a $50 million valuation just like that. Like, you've not even done anything, you've not acquired customers, there's no sweat equity. People will just tell you, oh, I want to raise $2 million at 5%. $2 million at 5%, what you're simply telling me is that your company is valued at $40 million and you haven't even started. Sometimes when you now do the math for them and they see the meaning of what they're saying, they're like, no, that's too high. So you want to be as realistic as possible with your assumptions. You want to create as many scenarios as possible so that you show an investor that you're not just thinking in a linear format. Realistic, multiple scenarios. Those are the way to go.
On the topic of valuation, so if a business just started,
yes,
they now want to start, they cannot determine the valuation at the beginning.
Yes.
Okay, so the people that always rush to say they should go and sleep.
They should do what?
They should go and sleep.
Well, yes, that's what people say. But there are as many methods of valuation as there are experts. But for me personally, I like to always advise and say that people who want to subscribe to valuation in the early stage or at the early age, there's a method called the DCF method, the discounted cash flow. If I start explaining DCF, we'll have a full masterclass here. But it's like
if it's free, we'll take it.
Okay. It's one of the best methods, for early stage startups, the DCF, discounted cash flow. And what it's simply saying is, oh, hello, Mr. Investor. As of today, I have nothing. This is how I intend to make money. I intend to make money via ABC. And if I look at ABC, I'm going to make, say, 100 Naira or 100 CDs in the first year. Across 5 years, I'm going to make 20,000 CDs via this. However, that 20,000 CDs I'm going to make is in the future. As at today that I am talking to you, that 20,000 CDs is valued at 2,000, is valued at 3,000. That's a popular method of valuation, the DCF. And so I advise early stage startups, in fact, even those who are revenue earning, I like, if you were to come to the intellectual plug, while there is asset-based, there is liquidity-based, there are ratio-based methods, that those ones leave you open for due diligence or questioning. Why did you use that? I'm not sure I agree with that. But when you use DCF and you do it appropriately, your assumptions are correct, it's the best method of ascertaining the value of an early stage company, even if it is just an idea.
Thank you so much for that. Yeah. I was having a conversation with a friend yesterday. Yeah. This seems very, very interesting, but we're talking about grants, crowdfunding, and pre-seed, right?
Okay.
And he was asking me, what would be ideal for the business we are trying to run? And I know this depends on the business you're trying to run and which one you advise, but looking at these three,
grant,
crowdfunding,
and
pre-seed, and loan. Let's add loan. So that's the fourth one.
Okay, so grant, debt, crowdfunding, and pre-seed.
So this 4, and he was like, he wants to raise money for the company.
Yes.
So let me just give you an example of. Let me describe the business. So think of Airbnb,
Okay,
but for spaces. So you know how Airbnb makes hotels or apartments or rooms available to you.
Mm-hmm.
But this time around for studio spaces, gardens, event spaces, and all that.
Okay.
Right? That's the business model. So now he's asking, what would be ideal to raise money now for this business?
Has he done the business before, or is it just purely an idea?
He started. So
he's made money from the business.
He's made money from the business.
That's a very good one. All right.
So it's running. So now these 4 things, which one would you advise? And what would be the difference? What's like, okay, this is advantages, this, that.
Yeah. The very first one I would advise him to go for is pre-seed. And I'll say pre-seed because it's equity-based. More times than not, in the startup ecosystem, we use what is known SAFE. It's called SAFE.
Yeah.
Right? A simple agreement for future equity. Yeah. So I would tell him, or I would advise and say, go for that, simply because you've tried the business, it's working, it's revenue generating. So anybody who you're going to and you're saying, I want you to buy an equity, or I want you to buy part of my equity, it makes sense to them because they've seen that you generated money from there. Of course, it's a whole lot more than that. It's deeper than that. But, that's my first take on that. With grants, it's a little trickier. Grants are generally seen as free money, generally. For me, who spent, I spent 2 years as part of the time when I was in the ecosystem pursuing just one grant. A story for another day. We got the grants, but we even lost the grants due to having the same amount of money in a sister account for my bosses at the time. Which leads me to what I'm saying. Grants are free money, but the criteria attached to the grant or designed by the grant maker is what now gets it tricky. Do you qualify for this grant? But I like to tell people that before you go for a grant, check out 3 things. Firstly, the amount of money that, the grant is issued. The higher the amount of money that the grant gives, the more the due diligence and the eyes and the different conditions and criteria you would have to pass before you access it. So 1, check out the amount. 2, you now want to see what are the conditions for the grant maker. The grant maker has put a condition, this grant is only accessible to people in Mozambique, Nigeria, and Ghana, or Algeria, Egypt, and South Africa. So check and ensure that you meet the criteria. Some will tell you, you need to have projects in southeastern Nigeria. Some will tell you need to have projects maybe just in the Cape Coast in Ghana. So make sure that all the different criteria you fit into it before you start applying for a grant, right? And then finally, you want to ensure that there is some sort of alignment. You're not going to go to a T.Y. Danjuma. There's a T.Y. Danjuma Foundation, which is popular in Nigeria, right? For health affairs. You're not going to take an educational project to T.Y. Danjuma Foundation. They won't answer you. You're not going to take a real estate building, for example, a real estate startup to a Bill and Melinda Gates Foundation. They are more or less focused on health, right? You're not going to now take a river blindness project to Tony Elumelu Foundation, who is focused on small businesses. So you want to ensure that there is an alignment when it comes to grants. Check that there's an alignment, check the amount of money you're applying for, and check that you really qualify, for the conditions or criteria that have been preset by the grant maker. We've looked at equity, we've looked at grant. We said crowdfunding. Crowdfunding is simple. It means you're telling everybody, I need help with this project. There are 2 ways to it. Is either you're telling them you're going to make money back, which means you have to ensure that you're straightforward. I'll give you the 2 instances. Or you're asking them for help, donation. Crowdfunding via a course, all this GoFundMe, right? That's donation. Then you also have crowdfunding, say, PiggyVest. Maybe an agricultural farm requires $1 million. And so they open it up to 1 million people to contribute $1 each. And then you've been able to raise 1 million. However, either ways, you want to ensure that if you're crowdfunding, you can meet your obligation, whether it is return on investment in the second instance, right? Or carrying out what you're raising that money for in the first instance. So if it is you're not returning, there are no form of investment in it. It's just like a donation or contribution. You still want to ensure that you use the money to do what it is that you've raised that money for. There's a guy in Iraq. It's Bruce. He's popular on Instagram. I won't say why, but he's very funny, and despite being in Iraq, he used a fundraising platform to raise, I think it was $2 million for a dog shelter. Stray dogs, random stray dogs in Iraq that are on the streets that are victims of war. Yes. But despite raising that money, right, he was answerable to people all over the world. Nigeria, Africa, in Africa, in Asia, everybody, Europe, America. He has a lot of followers who are Americans, who contributed for him. So you want to ensure that if you're going to raise money via crowdsourcing or crowdfunding, you meet the obligation or the expectations of the crowd who you are raising that money for. Imagine if that is Bruce guy collected that money but did not build the dog shelter in Iraq, he would have lost good faith. And then the final one is crowdfunding debt. Debt is very simple. Do not go near debt except you know how to pay it back. Like, your business has to have the cash flow.
Right.
I like to advise. In fact, my advice for those who are starting off new, you have an idea, you have no business with debt whatsoever, taking a loan. You want to ensure that your business has the cash flow. Every month we make, say, 2 million CDs, right? We've been doing that for the last 2 years. If you're now going to take a loan of 30 days, 1 million CDs, it makes sense because history or your historical show that you've been raising this amount of money and that you can pay it back. Where you've been making 2 million CDs monthly and then things go bad and all of a sudden you just want to go and collect a 30 million CD loan, like something is off. How do you intend to pay it back? So whether you're starting out or you're expanding, before you go for loans, ensure that you have a history that shows that you can pay it back.
Thank you. This was a good session. I'll send this part to the person.
No problem.
Now, let's pick, once again, business owners. The question I want to ask is, every business investable, but then I want to take it from the side of, let's say a business owner comes to you.
Okay.
And they have a business idea, or they are running a business, they want to move to investors. And the business itself is not investable in the sense that even though they are making money, it's not something investors would like to. Have you had that?
Yes, of course.
So how do you approach that?
It's the result of it. When you come to us, you don't come to us to raise money. In fact, if anything, you find out that we tell you we do not do investor connections. So don't come to us and think that you finish working with us and we'll connect you to Tony Elumelu.
Yeah.
No. Have I ever, story for another day, there is almost no investor, in the Nigerian ecosystem that I have not defended numbers with. There's no investor. There's almost no investor. Let me not say there's almost no investor. But would I now pick up the phone and start telling you I can connect you to A to B? No. And it's simply because of this, right? It's because of the fact that you can come to us to get your investment ready. And by the time that we're done, we show you that the business model with which you're trying to go in will not work. It's not friendly. It's not investment ready. I will give you a very quick instance without calling names. I had a client who wanted to bring in energy drinks into Nigeria, right? And the popular energy drinks in the ecosystem right now, Powerhouse, Monster, Red Bull. I think there's another one or so, but let's use these 3 names. If you're going to bring in an energy drink into Nigeria and your average price is, even if it is 30% higher than these 3 products, you've already failed.
Yeah.
Why? These 3 products have market share, they have brand representation, and they are mature in the ecosystem. So I'm not just going to leave a Monster, Powerhouse, and Red Bull and come to, somebody else when your prices are even higher. So as painful as it was for that client, by the time he was done, right, he was supposed to manufacture in Dubai. In fact, that's the good thing about it. He was supposed to, he had deals almost signed, everything ready to work from Dubai, and then they're sending down 10,000 cartons every week via logistics and all whatnot. When he did the numbers and ran the numbers, and it showed that, this would not work, very few people do what he did. Anyways, some will just leave it like that and go. But he came back again, and then he's like, I really want to crack this thing. How will it work? So we started a new plan altogether. Cut the whole long story short, he's currently producing in Nigeria.
Wow.
Numbers are a whole lot better, right? And there were so many factors that were affecting him then. When he was producing, or when he was supposed to produce outside, he was supposed to produce in Dubai, right? You'll be paying in Forex, foreign currency, and the whole volatility. And then he was also supposed to keep paying back commissions to them for every carton that they mail. So when there are certain instances that it's not feasible, right? Not everybody comes back and looks at it the second time to get the magic key.
Yeah.
However, I'm trying to say that there are many instances, or there are certain instances where you want to do a business and the business model you are adopting is not profitable. We will tell you.
Let's pick the word you just used, business model.
Yes.
Right. What are the key things that we need to look at? Definitely every business and the model they go with is not the same throughout.
Yes.
Am I correct?
Mm-hmm.
So if we pick a business model, what do you need to look at?
There are general ways to assign it, right? There are general ways to look at it. First and foremost, is it a B2B service? What I mean by that, is it a business-to-business service, or is it a business-to-business? Because when I say service, it could either be product or service, or a combination of both. And if it's business-to-business, how frequent? Right? Is it business to customers? How frequent? Is one thing for you to sell something, is another thing for you to have built a business model that allows for return customers. I'll give you an example. The man who is selling, a man could go to Lagos, right, understudy his elder brother or his elder cousin, or go from a rural community in Ghana and go to Accra and understudy his brother, right, and come and see that his brother is a millionaire, maybe even a billionaire from selling car batteries. Then he learns the business, and then he goes back, but he goes back and realizes, and he's now selling car batteries in a village where 95% of the inhabitants have bicycles. Do you think he'll make money? But it's the same business model that he learned in the town, quote and unquote, that made someone else a billionaire, right? So in looking at a business model, you want to see, how does it work in the locality or in the environment where you're supposed to play it? What is the potential of having return customers, right? And then, of course, there are certain businesses that are high ticket. So that means that the prices are very, very high. And that's okay, or the revenue they make is very high. But the cost of sale is also high. So, for example, imagine selling shoes, Gucci shoes, at maybe $2,000, but it costs you $1,950 to make the shoes. So while your revenue is extremely high, just from one shoe you sell, you make revenue that covers everywhere, but then your profit margins are extremely low. So you want to ensure that there are return customers. You want to ensure that the business works in the locality where you are. You also want to ensure that the numbers make sense, that the business metrics make sense.
Thank you for that. Now let's talk about pitching and storytelling.
Okay.
I think that's one thing I saw on your LinkedIn. Okay. You did a session for storytelling for investors.
Yes.
I don't think I was prepared to see that.
Okay.
Because why is storytelling so important when it comes to pitching or moving to investors?
The world has moved on to a point where storytelling affects everything in life. Mm-hmm. Everything. And maybe you can ascribe that reason to the fact that we now have a digital universe. I don't want to call it the metaverse, but we have like the digital side of things where everybody has, a digital persona on social media. Mm-hmm. And with the whole noise available, right now, social media experts say if you're unable to catch people's attention within the first 5 seconds, you've lost them. Yeah. The easiest way to keep attention is through stories. People want relatable, understandable stories. So I would give you 2 examples, right? Imagine someone pitching and then they tell you, oh, we've built a platform that connects riders to users in 2 minutes. That's amazing. That's fine. That's great. And then another person comes and tells you the story of Amaka, who prior to using their solution was poor, things were bad and hard for them. However, Amaka now met someone who introduced them to their solution. And by using their solution, Amaka has gone from earning $10 a day to $2,000 a day. I haven't even really said anything in the last 30 seconds, but just by putting or turning it into a story, having a main character, making the problem relatable and showing how that main character went from problem to solution gets everybody's attention, right? That's one way. I had somebody talk about a health tech. It was so amazing when I heard it. I was a judge in that instance. And then he's like, in 2013, I had an accident and I was taken to the hospital. Forget the fact that my wife was there. I died and woke up in 4 minutes. And then he goes on to now tell you that according to UNESCO, no, which one is one for health? Sorry, not UNESCO. UNESCO is education. According to the World Health Organization, that the expected ratio of doctors to patients is supposed to be 1 to, I think he said it was 1 to 200. But in places like Nigeria, it's 1 to 16,000. Exactly. Now, I'm not even telling you this story perfectly. Imagine somebody telling you this in just under a minute. So he tells you how he was about to die, and say for his wife, who knew the doctor. Yeah, the wife and the doctor went to primary school together, right? And so she interceded on his behalf. Then he goes on and tells you what the World Health Organization recommends, and then goes on and tells you what is on ground. By the time you put these 4 pillars together, you already understand or validate why his solution comes into play. The world has gone beyond just telling me to buy Fanta. If you're unable to make me see reasons as to why that Fanta would change my life or why that Fanta will make me a better person, you've lost me. And the easiest way to tell me how that Fanta will change my life is through stories.
Yeah.
So stories have become the cornerstone of business. Stories have become the cornerstone of content. Stories have become the cornerstone of literally everything that we do in our life. So stories tell, or stories make your essence or your petition or your narrative 100 times better.
So when it comes to creating pitch decks,
yes,
and for business owners, what do you advise? What would be the best approach to go with? Do they just put in, oh, okay, this is the business, the problem, the solution, this, that?
Oh no, there's a lay down way. First things first, I have to put down that there is nobody anywhere who has said that this is the only way to put a pitch deck down. Okay. In fact, if you do that, I'm sure everybody would eat their head out. However, there are laid down ways or generally agreed ways, right? You start with a problem, then you go to the status quo and show how that problem is affecting people. Then you go to solution. Of course, then things like market slide, how it works, business model, and so on and so forth until you team and you end up with your ask. But it is best that you integrate stories into even your problem statement. So you would hear people say things like, there's a startup, right, that does delivery from end to end. Maybe I shouldn't even call her name. She's in Lagos. She's very popular. When you open up their pitch deck, right, the first thing you see is, oh, meet Tolani, a 54-year-old business owner who has a business, but is unable to deliver her goods to her end users due to fragmented logistics industry, dishonesty of riders, untrained service providers. So rather than just opening that pitch deck and saying problems in the logistic ecosystem include unfragmented industry, untrained riders, when I see that, it doesn't make sense. But when I now see Lolade or Tolani, right, who is a business owner, and see the things that she's going through, or I see relatable issues that she's going through because of fragmented, because of untrained, then it becomes easier to understand, to relate, to identify with.
Do you believe a great pitch can make up for weak numbers? I know we spoke about numbers earlier, but I want your take on it. So do you believe a great pitch can make up for weak numbers, or do the numbers always win?
I don't know that a great pitch can make up for good numbers, but I do know that a great pitch will get you to phase 2. Right? So while the investor eventually do due diligence and find out that these numbers are not as good, a great pitch will get you to a second meeting with that investor. And who knows, while you may not get the numbers or you may not get the money for the numbers because of the numbers you had, you probably get something else, or you'd have gained a new contact or gained a new friend or ally. So that is to say that while it will not make up for bad numbers, it's still very, very important. A great pitch is very important, and it has the tricks it will do.
I like how you answered this question. Now, I want us to take a case studies. We're not going to use names.
Okay.
But maybe one business you've helped in the last few years.
Okay.
So what the problem was, how you guys helped them, maybe some of their pain point, the solution you gave them, but no names, no numbers, so that it's easier.
Okay. No names, but by the time I finish, everybody will most likely know who it is. This one went to Techstars. In fact, that's how we met. Went to Techstars. Techstars qualified for the final round of pitching, right? And then she believed that if I'm going to be on a global stage like this that has the opportunity and the eyes and ears of multiple investors, I should put my best foot forward. So help me. So, of course, we reworked her pitch, we reworked her numbers, and then there was advisory. So it was more or less hand-holding through the process. But I must put this out there. She was already very strong. She was already in an accelerator. To be accepted into Techstars is no mean feat. But so I'm here already. However, I want to put my best foot forward. Help me out. We've also had instances of people who... I'll give you a second one. This one now is even my friend. He wanted to open up a co-working space. In Abuja, I'm not sure anybody has what he has. He has a co-working space, a lounge, a mini golf course, and a cafe, all in one space with private offices, right? Wow. He wanted to open this up. And he wasn't, first and foremost, he didn't know how much he needed to spend. He didn't know if it was even worth it. He didn't know when he would make his money back. So, he buzzes and then he says, I would like to work with you people. So, of course, the first thing we help him with is desktop research, to even desktop and field research to identify and say, what do you need to do? What is currently obtainable? If you were to open this, how would you make money? Then the next step would be we now laid out his revenue streams as well as his possible expenditure. This is what you need to spend. This is what you need to make money on. This is what you need to spend money on in order to make money, right? And then test these numbers. So we run these numbers and then see what they look like. And it wasn't just enough to do that. Another thing we now did was more or less competitor analysis. So we now helped him visit, of course, not openly. A very good friend of mine likes to call it mystery shopping. So we now secretly visited, similar businesses that were doing what he was doing, finding out what are their key strengths, what are their weaknesses, what are the mistakes that they are making. They are making this mistake here, don't make it in yours. They are doing this thing well here, maybe you can also integrate it here. And then the result of the mystery shopping, literally, I think is part of the things that are keeping him in business till today, because he has a little bit of what everybody has and then majority of what nobody has.
Yeah. Wow. Interesting.
Yeah.
Now, 6 years in this business.
Yes.
When you started and now, have you seen a change or a mindset shift in how people approach?
Have I seen a change? Of course, you've seen a change.
Like generally, how people are thinking about business, raising money, investment, and all that.
Yeah. Okay. Now I get what you're asking. I get what you're asking.
Have you seen a lot?
Yes, there has been a change. When I started out, in the early days, and yes, it's been 6 years at the Intellectual Plug since 2019.
Yeah.
But it's been 11 years for me as an individual, I started this out in 2014, then officially. So through this time, yes, I've seen change. People have gone from, free money to realizing that investment is not actually free money. People have gone from, times when in 1 year you could hear 6, 7, 8 deals that were, not of $50 million, and startups just raising money simply because, they could or they had the right connections. That's no longer obtainable. So I've seen people's mindset go from free money to realizing that, wait, investor money is the real deal. I've seen people's mindset go from money is generally available to, it's actually not as easy as we thought. I've seen people's mindset go from, it's not just a business plan, I can do it to myself, to really appreciating the end-to-end service of business development or investment readiness as a service. Right? So yeah, we've seen lots of changes.
Talking about investment, I think one of the problems or one of the scary things people usually think of, okay, this investor gives us money. I think we spoke about it a couple of minutes ago.
Yes.
And then now there's more light on you, right?
Yes.
Maybe they might control one or two things, they might have a say in all that. So that's fear of, okay, I'm taking the money to help the business, but then now it's like giving someone the power to control that business.
Yes.
What would you advise business owners to do so that at least, even though there's investment coming in, there's an extra person coming in on the board,
yes,
there's no issue at the end of the day and things are still being run? Because I know investors, definitely they care about their money because they are putting it there because they want to see growth in that.
Course.
Yeah, so what advice would you give to business owners?
That's a very good question. And I'm thinking like this, I'm trying to remember the name of the post, but I've answered this question on Instagram in one of our posts. And my advice would be, ensure that, I think it's 3 things they won't teach you in business school or something like that, and I was trying to talk about, everybody's going for investment, but make sure you can answer these 3 questions before, or make sure you know these 3 things before you start going for investment. The first one is valuation. And valuation, it's tricky with valuation in terms of the fact that you can value something at 500. You've done it via all the methods Nnamdi told you to use and everything is working perfectly. It's 500 million CDs or it's 5 million CDs, for example. Investor will come and tell you that does not see this thing being valued at more than 800,000 CDs. You valued it at 6x more, right? So valuation is relative. That's the first thing that you have to understand. Valuation is relative. The next thing which you also want to be very careful about. So what you want to be careful about in terms of valuation being relative is if you're sure and certain of your valuation and an investor does not share the same sentiment with you, there is no harm in letting that investor go simply because they don't share the same and you're certain. This is not guesstimation or taking a chance. You've done your numbers well, you've done your work well, you're probably even post-revenue, that means you're making money, you've done your valuation. This valuation is 2 million CDs, for example, or 20 million Naira, for example. And then an investor comes and he's telling you that he's not going to work with you except you value this at 100,000 CDs. If you know your worth, if you've done your work, you will know that you and that investor have no business together. Like, permit my French, go to wherever, I don't need you. But you would only be shaky if you haven't done your work, right? The second thing you want to do is ensure that your vision and their vision aligns, right? There's a very annoying case, even as I'm thinking about it now, I'm so angry. I think it's called Grass Fields. It went very popular. Patty in Ghana was even the person who brought it to my notice. 2 young entrepreneurs, Senegal, I think one was from Senegal, one was from Nigeria or something like that. They built a fashion brand in the US or in the UK. An investor guy just came, hoodwinked them into giving, I think, 51%. Long story cut short, yes, over a period of 2 years, he literally threw them out. He seized the social media. He took all forms of revenue. They literally became employees in their own company. It's so annoying every time I read about it.
51%.
He took more than that. So if 51% means that they even had 49.
They
he eventually
49.
fired them. They literally let go. Like, they came on social media and were crying, this guy has taken our company for us or something like that. Nothing anybody could do. By the time people checked, they had signed agreements and all whatnot. So you want to ensure that the vision of the investor aligns with yours, right? They used to do a lot of, and that was where their problem started up from. They used to do a lot of indigenous pieces, and so they had manufacturing happening a lot in Africa, and then they would ship it all over and sell there. When this guy came, he was looking for ways to reduce the cost. So I think he told them they are now going to start producing in Asia, which lost the essence. You can get cheaper labor in Asia, maybe, but what happens to the fabric that they were using? What happens to their raw materials that they were sourcing directly from here, in Africa? So you want to ensure that your vision is the same, so that you don't just take money and an investor is now telling you something that used to impact 10,000 people. You're not like, no, let's just leave it at 500. Let's start pursuing profit. That's another thing you want to check. And then finally, you want to see what's their long-term goal. It's almost the same thing in terms of vision, but what's their long-term goal? An investor who is looking to just make money or cash out, which most investors are looking for in the first place, in the first instance, may not necessarily be the best investor for a project that is impact-based, right? But if you don't do your due diligence in the beginning, he has money, you have a problem, you just take it. He will turn that impact-based venture, he or she will turn that impact-based venture into a profit, making machine, as opposed to impact, which was why you even went to them in the first place. So ensure that your thoughts, your vision align, and that you are all on the same page, before you now start. And finally, please do your research. It's so heartbreaking. I won't call names, but it's so heartbreaking. You build something solid, everything is okay, everything is fine. Then maybe you raise money from funny people, right? And then you go to seed. I've seen this happen before. And then the institution you're trying to raise from at seed level carries out due diligence, only to find out that somebody with shady background, somebody who has laundered money is in there. So carry out your due diligence as much as the investors carry out theirs.
Oh, that story is so sad.
Yeah.
Anyways, thank you. What's your biggest lesson running the Intellectual Plug in the last 6 years? What have you learned?
1% of 100% of 10 is 10, but 1% of 1 million, for example, is 10,000. What I mean by that is you achieve more with more people. When I started, I used to be the guy that writes business plans and just that guy. But with a solid team, behind me right now, my co-founder, which is one of them, and then very solid team behind that, the financial modeling team, the customer support team, graphics team, and so on and so forth. I have simply learned that alone, there's only so much you can do. When you have the right people with the right mindset as part of your team, there is no limit to what you can achieve.
How do you measure your own success as a consultant and strategist?
That's really tricky. That's really, 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 really tricky. I don't know that there's any right answer to that. So I'll just blot out things that come to my head. By having, customers keep coming. As long as customers are coming, requesting for our services, it means that we're doing something right. Another way that we know that we're doing something right is by the percentage of people who come back.
Right. Okay.
So when we build a financial model, for an example, and you go to speak to an investor, you very quickly, it's not even that anything is wrong. You want to raise 1 million CDs. The investor says to you, I don't have 1 million CDs. I have 200,000 CDs. Go and rework your numbers and come back to me. Your first instance will be to come back to us who helped you build the model. So the percentage, people will not come back to you if you don't treat them right, or if you don't treat them respectfully, right? So the percentage of clients who come back to us when they need to is another metrics for support. I used to use this one before, but I've stopped it. The level of engagement on our posts on social media. Uncle Mark Zuckerberg and his team, I don't know what they're doing on Facebook and all whatnot. Today you have 100 likes, tomorrow you're having 10 likes. Yeah. So I removed that vanity metrics. But these are just some of the ways that...
that was funny. Okay, what's the long-term vision? I mean, you guys are doing amazing.
Yeah.
The Intellectual Plug, but maybe let's say next 5 years.
At this point, you call me crazy, and that's okay. Actually, you're correct. It's actually the next 5 years. I've held this vision now for the last 2 years.
Okay.
Now, I want to be a part of the story for the next 100 unicorns that come out of Africa. Yes.
Crazy.
I want to be a part of the story of the next 100 unicorns that come out of Africa. Then the second part of it is that I found out about 2 days ago. Actually, I've been on this thing now, but then I started adding numbers to it. That the capacity building industry in Nigeria makes up about 10% of our yearly budget, which at 1 trillion naira, that's over, I think about $2 billion every year. $2 billion every year in terms of, it's actually about 30% of the budget, yes, which makes up about 3 billion, which is about $2 billion every year.
Okay.
That goes into capacity building, training, human development, upskilling, and all whatnot. So my vision is to capture 5% of that market, starting from 2030 every year.
Every year.
Yes, in capacity building.
You seem like someone that's planned. I like that.
Yeah, you can.
I like that. Wow, this has been an insightful session, but we have final 7 questions.
Okay.
Sure. These ones they're not tailored to the conversation. They're more like rapid fire kind of thing.
Sure.
All right. What's a lesson life had to teach you the hard way?
What's a lesson life had to teach me the hard way?
Yeah.
You are not Power Mike. No need to go into the details of it, but I've learned to respect boundaries. I've learned to respect people's skills. I've learned that I can't do it alone. Like I said now, my team is made up of myself and about 2 other intelligent guys and about 7, very strong, intelligent, supportive women who keep the company going. So I've had to learn that I'm not Power Mike and I can't do it alone. You need very good team members who share your vision to succeed.
What's a skill everyone should learn, but most people don't?
Communication, interpersonal communication. I've learned to improve my communication skills, simply by communicating with more people. And then when things are clearly stated, there's understanding as opposed to assumption. Yeah. When there is understanding, there is less chaos. Communication. Everybody should learn to communicate better and more professionally.
If you could time travel, but only once, where or when would you go? It could be a place, it could be a time.
That's a good one. I'll time travel back to when I learned how to swim. It's probably 7 years old.
I don't know how to swim.
That felt like bliss, trusting that final, you learn, you're taught, you watch videos, and then you get into the water and you have to just trust. For me, I learned on my back, right? So for those who know how to swim, you have to literally sort of trust and just let the water carry you. That was a very defining moment for me, just learn to trust life. It's not always going to drown you.
I will not trust what I do.
Yeah.
If you weren't doing what you do now, what would you be doing?
Most likely working in the bank. I like structure. The bank is a very structured place. Most likely working in the bank.
If you could send one message to the entire world, what would it be?
Stay true to self consistently. Nature rewards consistent. Nature works. Consistency is even a law of nature. What do I mean by that? There is summer, there is spring, there is autumn, there is winter. It will keep going like that. I don't think I called it in the accordance, right? But there are 4 seasons and nature is consistent. For those who believe in God, God is consistent. So stay true to self consistently. It's easy to become another person.
If you could have dinner with your younger self, what would you tell him?
If you could have dinner with your younger self, what would you tell him? Worry less. I used to be very anxious, probably still am, but less than I used to be. As I grow older, I learned that, there's only so much you can control. And anxiety doesn't exactly solve the things you can't control, but worry less.
If you could invent one thing to make your life easier for you, what would it be?
I hate hold up. So it'd probably be like the ability to a disappearing capsule. Just enter it, appear wherever I want to appear. I like commuting, I like traveling, but I hate traffic. Like, worst still when I'm the one driving, just kill me already. So a disappearing capsule. That's what it is.
Interesting. Okay, please look at that camera. Final words for any business owner, anyone that wants to start a business.
Okay. Business is a bed of roses. You can either complain that roses have thorns, or you can be grateful that thorns, have roses. So if you're going to go into the business, be sure that be hopeful you're going to succeed, but expect whatever comes with it. It's a world of two tales.
All right, thank you so much.
Thank you so much, Ray.
Or Nigerian jollof.
Is that a trick question?
It's part of the interview. If you don't say that right answer, we'll delete the episode.
Okay, Ghana jollof.
Thank you.